What's that?
Frozen mics, so nobody can hear us. We just keep acting like we're dancing.
Mics are good?
Mics are good.
Mics are good? Can you hear us?
Refresh the desktop.
Refresh.
NDI desktop.
NDI. Rocco. What is going on, everyone? Happy Friday. Happy Forest Day. And welcome back to Sin City Crypto Live. My name is David. I'll be one of your co-hosts. And today, like every day, we're coming at you live from our studio here in the heart of Las Vegas, Nevada with our daily live show. Today, we have a very special guest. Our man Forrest from Crypto Stackers Pro will be joining us as he does every Friday to break down charts, talk about all the important happenings. What happened with Gala? What happened with Matic? What happened with Loopring? We just saw it's pumping 40%. We will ask our man Forrest about all that. Also, Binance in trouble. Apparently, they've been helping Iran skirt sanctions. We'll talk about that and much, much more. But before we can, I have to introduce you to your other co-host. Hello, Robin.
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information, and we package it up in a fun and sexy way. Also, we like to pretend that the mics are off and really they're on. We also film on location in Las Vegas Strip, where we have our street interviews. If you haven't seen our latest one, go check it out. And a lot of big action today. We had a lot of big movement in Bitcoin.
We did?
Yeah, it moved up and then it moved back down. And now, you know what's funny?
What's funny?
I started working on this thumbnail this morning. Bitcoin was well over 21,000. I'm like, yeah, BTC pumping, put the picture of the bull on there. And then we launched the show and Bitcoin's back where it was before.
Oh, Bitcoin.
Sneaky Bitcoin.
Sneaky bit.
So, let's get right into the roll call. All right, so, all right, let's see here. First up in the chat, we got Robert Salazar. Congratulations, Robert. You are the proud winner of a pat on the back. And we also got Broke Yoshi in here. We got Crit Cat, Fino, Jason, Ra, Cyan, Miguel, what's up? And then we also got Broke Yoshi, Biomex, Kyle Hansen, and then we got Blake, the Naked Canadian, put some clothes on. We got Moby Sage, and then we got Black Eyed Child. Hola! Welcome. Sin City Crypto. And then Jay Delano. We got Luis HP Lightning Bolt. And then Broke Yoshi, Red Man, and Why You Loud Gang.
Say Crit Cats?
Crit Cats, I think so. And we also got Rob in here. Two Robs. Double Rob.
So, Rob.
Hola! And Skeezy as well. Made the final cut.
Made the final cut.
All right. If you are new here, say hello so we can drop a hola. And then off to a slow start. Only 40 viewers here.
It's okay. We're going to pick up. Robin.
All right. Make sure you hit the like button so that way we get other people up in here. You know what I'm saying?
So, Robin, you have your level 2 certification for a sommelier, right? So you know about wine.
Yes.
So in order for something to be called champagne, right? Because you have champagne, quote, champagne from California, from England.
But not champagne.
Not champagne. What makes it a champagne?
Well, as you said, it comes from the region.
The grapes have to come from the region of France, right? No?
It comes from the Champagne region.
Champagne region of France, yes. Okay.
Yes.
Well, look at this meme. It's not a recession unless it comes from the recession region of France. Otherwise, it's just sparkling economic pain.
So very nice.
If you're in the service industry, you would find this funny. I thought this was hilarious. That's funny. But, it's a common theme. And when I was doing my research on these FOMC people with the votes, it's funny how almost all of them, it's like the data is right in your face, but they find a way to manipulate it. And some of them even come out and say, we have to augment the data. And so at what point are these politicians, are these lawmakers, are the people that control what happens in this country, in the U.S., of course, I'm speaking of, are they going to sit back and say, look, we're in a recession. Let's figure out a plan to get out of it, how we're going to get this country's balance sheet healthy again, how we're going to get the economics in this country healthy, and how we're going to make sure people don't lose their stuff, right? Their homes, their cars, default on their credit cards, whatever the case may be. And so, I don't know. Wishful thinking? Maybe. What are your thoughts?
I stopped trying to figure out what the hell the government's doing. I stopped trying to figure out what the hell their narrative is. Obviously they're trying to sugarcoat things to make them look better than it is. You have politicians that are like, "Oh, we're good here." It's like the guy that gets laid off, or say the guy that gets in trouble at work, or he gets fired or suspended or something, and then he's at home trying to tell his wife, like, "Oh, we good. It's all good." Like no, it's not. Yeah.
Are you good?
I'm great.
No, not you.
I've been through some market cycles before. Here's the thing. Ask yourself a question. Will we see new all-time highs in Bitcoin ever again?
No. Just kidding.
Okay. So, if you're here watching the show, I'm under the assumption you probably believe in the long-term longevity of So that's like extra long. And so you believe in the space, you believe it's going to come back. And so, what a better place to be in is now when things are cheap or things are on sale and that you believe is going to go up. Same thing here. Why not just accept the fact that we're in a recession? Why not, as a politician, embrace it and build a plan on what the next move is? Because if you're in denial of where you're at now, how can you build on the next step when you don't even know what step you're on at the moment? Right?
Yeah.
If you're saying you're not in a recession, which we are, if you're saying that we're not going to be in a recession, which we are, and we will be further into it probably, seems like the direction. Yeah, who knows?
The jobs numbers are good.
That is correct. But also, we're not taking in any refugees, or at least not in the same numbers we were. And we also had the big resignation where all the baby boomers took some time off for COVID and never came back to work.
Like, wow, this is kind of nice. We're not going back. I want to jump right into, something that was circling yesterday. It was pretty big news. Everyone thought Gala was hacked. Someone had minted over 2 billion tokens and dumped them all. But we have the actual story here for you guys. And so a hack did not happen on Gala. It was actually, a hack did happen, but it was a white hat hack, which is a good kind of hack. And
good
so,
hack?
What?
A good hack?
A good hack. There are good hacks. It's like there are good co-hosts and bad co-hosts. So Gala Games calls for calm after fears of a multi-billion-dollar hack. This is a source from Cointelegraph. The initial panic came after a single wallet address appeared to mint over $2 billion of Gala tokens out of thin air. Fears that the unusual activity was a sign of an exploiter rug pull caused the Gala token price to drop a dramatic 25.6% in a matter of, I believe, an hour and a half or 2 hours. The activity detected on PancakeSwap was performed by P Network, which was working to drain the liquidity pool as a means to safeguard it from a potential vulnerability. So they hacked themselves. They drained the liquidity pool to safeguard. So, I don't know. You got any thoughts on this? Because we had no idea what was going on. We were like, "Yo, what's going on?"
So let's, hindsight always works very well. And I'm pretty sure that was it P Gala, right? Is that what it was? What it was?
I believe so. Yeah.
So, anyways, don't you think it would have made sense to come out with a press release and be like, "Hey guys, we're going to drain all the liquidity in this pool, and the market price is going to tank on this platform. So, but this is what we're doing. This is the intention."
But then,
were they not doing, or did they not have that PR?
Well, I don't know,
because they didn't want people to try to pull liquidity via an exploit, right?
Right. I was just gonna say, I don't know if that would be signaling to a potential black hat hacker that, hey, we're doing something to the back end, or we're pulling liquidity, and they jump in somehow. Something, I don't know. I don't know how that works. If that would cause like an opening in their code or whatever the case may be for a real hacker to go in there. But
you know what really irritates me is that my phone just keeps ringing nonstop.
Politicians?
From these politicians, man. I just leave it at that.
Did you vote? What? Midterm elections are on.
I am literally
Tuesday, right?
I told you I'm not voting. I'm not voting because they keep calling me. They keep calling me, both sides, Democrats, Republicans. They keep calling me every day. I get at least 20 to 30 calls, and they also text too.
November 8th.
And so
Tuesday.
Because you bugged the crap out of me for your vote to a point where I'm not voting. I don't care.
Wow. All right, so guys, don't freak out. Gala's fine. Nothing happened. Rob, let's take a quick look at the markets before we bring Forrest on.
Also, Matt Chu says, "Thanks for the heads up." So yeah, we were kind of doing as the Gala thing was going down, we were kind of discussing what was going on, and so I reached out to Matt Chu, who's the guy that was on with us yesterday. Matt, who's the big Gala guy. And so I was like, hey, man, you know what's going on with Gala? Anyways, dude said he made some money. So
There you
go. The price is still way down from where it was. It was over 40 cents yesterday.
4 cents.
Oh, 4 cents.
Yeah.
It was over 4 cents yesterday going in to that situation. Came out on the back end at 3.4 cents. So, you know, that's still, is that 20% still?
Yeah.
Right? You know what? I haven't. Well, let's take a quick look at the charts, and then I will take a peek at Gala, see where it's sitting at right now. You know, that little hiccup aside, big fans of Gala here. So if you can get it cheap, why not? Bitcoin, as we mentioned, did have a big rally this morning, which was in parallel with the stock market. NASDAQ, S&P 500 was all over 1.5%, which has pulled back as well. NASDAQ now is down 0.5%. So a lot of volatility there. Also, a lot of volatility in BTC this morning. We did get as high as 21.2. And
over the last 12 hours, there has been $40 million worth of Bitcoin that's been liquidated, and about 80% have been shorts. So.
Saw somebody in the chat say they made a bunch of money. On some shorts and longs. Now,
You can make money in the bear market, guys.
that's right. So Ethereum over 1,600, so that's in a good spot. I remember we were talking about, hey, it's finally over 1,500. So now at this point, you know, we are starting to see a trend in the right direction. Taking a look at the Ethereum chart, I mean, pretty good, right? I mean, look, all of yesterday, with the exception of a couple little jumps, all of yesterday we were, or all week, excuse me, we were under 1,600. So good to see that. You know, we're making progress.
ETH is solid, man.
But now look at this monthly chart, man. Remember that this is just the month. This is post merge. So remember that Bitcoin has been around the 20K mark for the last month. And so taking a look at the Bitcoin chart, as you can see here, we were under 19, but taking a look at the Ethereum chart, seems like we're getting a little better returns on Ethereum as of lately, at least on the month scale here.
Someone tweeted, said if MicroStrategy would have put all the money they put into Bitcoin and ETH, they would be up, I don't know, a couple billion or something, 100 million, a few hundred million.
You know, Sailor ain't about that ETH life. Now, also XRP up 7%, so big pump there. And then what else we got?
Polygon, and Forrest is going to do some TA on Polygon.
Well, here, why don't you actually? You got a little insight there on here. I'll let you.
Polygon. Yeah, you know, let's swap over to my laptop here. Okay. So, just to kind of go back to what Rob was saying, or kind of just to rewind a little bit, market cap sitting a little bit over $1 trillion. Volume is up to 105 billion. But what I wanted to point to was a couple coins, right? Polygon up 20% in just the last 24 hours, closing in at a $10 billion market cap. It has a real shot of flipping Solana. Then you would have two ETH-based two Ethereum native projects in the top 10. And so if you ever wonder, or if someone tries to tell you ETH is not king, this chart begs to differ. And then there was Loopring was pumping like 40-50%. So I'm just going to take a look at the Loopring chart real quick before we bring Forrest on the show. So I looked for some Loopring news, couldn't really find any. This thing is up 47.88% over the last 24 hours. Just a parabolic chart, and I won't go into CoinMarketCap. I'll just kind of plop it up here. But if actually, let's see this. Let's go 1 month. Bam. I mean, it started raging yesterday, right? Yesterday went from 28 cents all the way up to now, I believe it was 40 cents. And so if you're not familiar with Loopring, they are layer 2 for Ethereum. They essentially batch orders. They have an app. Also, you can use their desktop. It's like it's an AMM. So you can buy and trade ETH-based tokens on what am I doing? On Loopring's essentially wallet, or some people call it a DEX. And what they do is they take a bunch of transactions, they batch them together, and they submit it to the mainnet, saving people a lot of gas fees. And again, the user interface is pretty cool. Something I enjoy using, but didn't dive too deep into it.
Yeah, so. I'm like looking. I can't find anything on Loopring. So maybe there's something we don't know. Here's the thing. No matter how confident you are in a project, if it ain't Bitcoin and it rallies 50% and there's zero news to follow, it's going to pull back, right? I mean, generally that's what happens. Not to say that it's guaranteed. I mean, nothing is guaranteed or promised. But just looking at history, if I ever see an altcoin rally significantly and there's no news behind it, generally has something to do with manipulation or just some kind of pump from a community, which usually would be short-lived. So I would maybe pump the brakes on maybe getting into it at this moment. That's just my personal sentiment. Taking a quick look at the.
Remember, you never want to jump on a high-speed moving train.
Yeah, I mean, even if you're like, Loopring's about to rip or tear, I'm gonna wait for a pullback. It's up 50%. So now taking a look, crypto fear and greed index at 30, crypto bubbles. As you can see here, we mentioned Loopring up 47%, Aave up 12, Polygon.
You see Arweave pulled back. See what I'm saying?
Yeah, 6% here, and then Matic up 18. So big, a lot of green in the markets today. And then as we mentioned here with the stock market, kind of flat right now. NASDAQ down just shy of 0.5%. But everything else is kind of right there at baseline. And that's all I got. You want to get it going?
Let's bring the man.
Let's get Forrest in here.
Forrest, bring yourself here now into the chair. Forrest,
what's up?
What's up, bro? Yo. Hey, a lot of people were calling you Genghis Khan with your costume on Monday.
Oh, with the dog, the coyote.
Said you look like Genghis Khan. It was pretty.
Nah, if you were saying you look like
Dogecoin.
The shaman guy from the the White House attack.
Oh yeah.
Did you see our show that day? We had Michael Saylor on, man. That was crazy.
Yeah, I did. I caught probably 75-80% of the show. Yeah, that was amazing. I saw it got reposted and kind of went semi-viral too. That was really hilarious.
Saylor reposted it. Yeah, it got like 70,000 views. That was pretty cool.
Okay, so not semi-viral, it went legit viral.
Is that what is considered viral? Right? I think like 1 million is considered viral, no?
Yeah, that's probably more like it.
Decent viral.
So maybe semi-viral.
Bear market viral. It's a different category. There you go. So.
BMV, not the DMV. All right. So I want to ask your guys' opinion on this, okay? So Michael Saylor tweeted this. Well, it was actually a response to Elon Musk. If Twitter offers a variety of verification options, the revenue model will switch to recurring subscriptions and advertising becomes irrelevant. So he's saying should have 4 different check marks. Blue should be public figures. Purple should be corporations. Green should be individuals, and orange anonymous. Pricing can vary by account type or characteristics. What are your thoughts on this whole subscription models of getting verified? Do you think that'll make the Twitter experience not only for the consumer, but for people like us who have a social media platform that want to grow it and make sure people aren't getting scammed? What are your thoughts on this idea, Forrest, or just the idea of $8 a month, get the blue check mark?
Yeah, it's a tough one. I see both sides of the argument, but if I was at Twitter, if I was in charge of revenue for Twitter, I mean, this is the path that I would be going down. I mean, you got to think. I don't know exactly what Twitter's user base is. I think it's over 300 million users, but you don't know how many of those are bots. Don't quote me on that number, but you got to think, like, even if he can get 10 million people to sign up for $8 a month, all of a sudden that's $80 million a month in recurring revenue, and that recurring revenue is very, very nice. The big thing that I've seen is because Twitter is an app in the Apple App Store, Apple's potentially getting a huge cut of that subscription, like 30%, I believe. So that's a pretty big amount to just be cutting a check to Apple for. So we'll see if Elon wants to go around that. As far as dividing it by different colors for different purposes, yeah, I think that's an interesting way to go about it. Yeah, it's interesting. We'll see how it plays out. What's one of my kind of observations is it's almost ironic because people are so against KYC, right? You go onto an exchange and you don't want a KYC, but now like people are lining up and potentially paying to KYC. Having this blue or whatever check mark and having everybody verified, that is a really interesting way to basically do KYC. And if you're going to start offering financial services like a Dogecoin integration or a crypto integration, you essentially just already have everybody KYC'd, and you have a leg up on a lot of the exchanges. So who knows? Maybe Twitter will become some sort of I don't know if it'll become a crypto exchange, but have some sort of integrated service where you can buy and sell crypto or swap in and out of crypto for payments. So I just see that as an obvious, like, hey, let's get everyone KYC'd under a check mark, and then all of a sudden you're able to give them financial products. So it's interesting.
That is interesting. And I read an article today. Dogecoin Dump says Elon reports that Elon is going to table the crypto thing. I'm just like, bro, like he's got way too much sway over the markets, in my opinion. I don't know if you guys agree or not, but I don't understand why people hang on to every single thing he says or does or tweets or a picture.
I mean, if you think about it, I mean, dude is a celebrity. He's the richest man in the world. And
is he?
And he has one of the highest valued companies out there, multiple companies, actually, works with the government. And dude is talking about an altcoin that is sitting with a $6 billion market cap and outside the top 10. Or no, excuse me. No, within the top 10. I was looking at SHIB. My bad. $16 billion market cap in altcoin. And so you know how much things will move with just a small amount of money. And so if retail listens to people respect that dude. I mean, the dude single-handedly is putting people back into space. That's crazy. I mean, there's only a handful of nations that have put people in space. China, Russia, like U.S., like France, I think, and like a couple other. And then Elon. Like it's so people just will blindly follow him because they believe in everything he says. And he has a pretty good track record. I mean, he built PayPal, right?
Yeah.
And so I get it. I mean, I don't understand. I wouldn't follow it, but I understand, I mean, we see the meme mentality. So, I mean, sure. I mean, the people are going to overreact. I mean, dude could sit here and say, yo, I eat McDonald's every day for breakfast. I mean, what do you think McDonald's is going to do? People, you know what I mean? People all of a sudden be like, oh, I want to be a multi-billionaire tycoon. I'm going to go to McDonald's and have breakfast.
You leave McDonald's out of this.
I'm just saying, man. McDonald's breakfast is pretty good.
It's a lot of it's a lot of bots too. There's like a lot of bots that read or parse Elon's tweets. And they've gotten pretty advanced with them. Like there's even like bots, I believe now, that can parse out whether there's a Shiba Inu in a picture that Elon posts in a tweet to like automatically go along if he posts anything about a Shiba Inu or
Really?
about Dogecoin or anything like that. So yeah, I think a lot of it's just kind of that automated pump volume comes in, people buy it up whenever he tweets, or the bots buy it up, and then you kind of have the retail crowd following in slowly, and then they get dumped on.
Damn.
So it's a crazy world we live in now.
Yeah. Doggy coins.
People are making bots to identify a dog in somebody's social media tweet to
Yeah,
go
but think
long
about how much money people
to
are
go
making.
long on a financial move. Like it's crazy when you you zoom out and think about it.
Yeah, it is. You know anything about loop ring, Forrest? I couldn't find any news. That thing is up 40 some percent.
Yeah, we know you're an Ethereum guy. Loopring is a
Yeah.
beautiful interface. So
Yeah, I believe, if I'm not mistaken, Vitalik is a pretty outspoken advocate for loopring. I think he likes loopring a lot, or said stuff in the past. I don't know if he tweeted anything recently that would have pumped it. I personally think it's just speculation based on Matic pumping. I think Matic's leading the charge, and loopring in comparison has a history of pumping. It's a similar layer 2 Ethereum. It's like, it's going to be somewhat correlated, and it's just way lower market cap, so it's just pumping way harder. That's what I think. Like if Matic hadn't just pumped 20% out of nowhere, or however much it's up, I don't know that loopring would have followed. I haven't seen anything that is specific to loopring. I think it's more of just a kind of a higher beta play from Polygon pumping.
Okay. All right, Forrest, we're gonna hand this thing over to you, my friend.
Sweet. All right, we've got some fun charts to look at. First the doom and gloom. Oil's moving back up. I tweeted out earlier today that, or maybe it was yesterday, I think it was earlier today, that everyone has been obsessing over CPI data, FOMC meetings, inflation. What are things being priced at in dollars? Is that going up or down, and how is the Fed reacting to that? I think next year, what people are going to be obsessing over is oil prices. I saw some analysis that said there's a case for $230 per barrel oil. And I'm not going to get rid of all this just because it's like off the charts here. I had some.
Did you say
some writing up there,
$230 oil?
Yeah. Let me see if I can actually find that tweet. I was kind of sharing it in the Discord. Rystad predicting $230 oil next year in escalation scenario. The key point for investors to grasp: oil's potential return distribution next year is not normal.
Damn.
So there's a bimodal distribution, or basically there's two scenarios to take into account. So normally the energy sector's historic return is unimodal. That's this light blue color. But because there's a crisis or a war between Russia and Ukraine, there's a bimodal distribution where you could potentially see a scenario of escalation between Russia and Ukraine. I know it's already escalated quite a bit, but if it continues to escalate, there's also other geopolitical factors at play, but that's the big one as it relates to oil. You could see a higher return distribution for oil. So yeah, this is very, very interesting. Quantitative-minded portfolio managers are grasping this. Energy will take share from other sectors. Basically, this is really, really in line with what I've been talking about for a couple months of like energy. Energy must be overweight. That's what I've been saying. Energy's a hedge because there's potential for prices to go up, and that's not even taking into account the draining of the Strategic Petroleum Reserve in the United States to artificially pull these prices back. Not only that, but if I just get rid of the drawings here, this looks like a very obvious, very clear bottoming structural. You can see the inverse head and shoulders playing out here. We had our left shoulder, our right shoulder, our kind of stab, V-shaped bottom. We've started to make a higher low, and we've bounced off of, if I get that back on, we've done what is essentially a bump and run where we break through our resistance level, make support on top of it, and now we're going and climbing higher. Yeah, oil is on the rise again. It's on the move again, and I think it'll be, there's potential for it to be at these elevated prices in no time. Remember, like the only thing that brought it down, and I do mean probably the only thing that brought it down, is just the rapid draining of the Strategic Petroleum Reserve. The Fed, not propping it up, but suppressing it. So that ends, I believe, in December, and that has been a record drawdown in the Strategic Petroleum Reserve. I just don't see, unless somehow demand curbs drastically, And winter is usually for oil and gas, kind of a lower demand period. But I just don't think that's even going to put a dent in the potential price escalation that we could see. And again, that's you have that, and then you also have the Russia-Ukraine conflict as well that could escalate even further. And they're estimating $230 a barrel. It'd be absolutely insane. So I do think it's really important to be hedged into oil. Oh, go ahead.
What would you like if, obviously, you don't have a crystal ball, but if we hit $230 a barrel, what's going to happen to risk on assets? What's going to happen to the Bitcoin miners? I mean, if you were to kind of extrapolate that situation and say it does get to the worst case scenario, what are your forecasts? Is it like?
Yeah, it's not good. And I want to also share this thread as well. Basically, that obviously higher energy prices would be terrible for any proof of work cryptocurrency. And that's actually why one of the reasons that in the short term, or kind of, even midterm, 6 to 12 months out, there's really no catalyst for Bitcoin. There's only negative catalysts or potential catalysts for Bitcoin, in the sense that if energy prices spike, that could drive Bitcoin's price down. There's no positive catalyst until the Bitcoin halving of March in March of 2024. At which point, I will more than happy be long crypto or long Bitcoin. I will more than happily watch Bitcoin's price appreciate, or expect Bitcoin's price to appreciate as a result of that halving, like we've seen in the past. I do think it'll be a decreasing effect, just like each previous halving has been in the past. But as far as the broader view, this is really scary, and this is kind of laying out the probably starting 2 months ago. I laid out this black swan event theory of like rising oil prices and rising energy prices. So what this thread is from somebody that's a respected analyst on Twitter. We follow them in the Smart Money Discord. I might as well just read this straight out. I think it's really, really important. I think it's important to spend the 2 minutes that it takes to ride this. So a few thoughts on the Fed's actions this year. This is from November 2nd, so like 2 days ago. You see a small subset of traditional finance boomers who express a kind of glee or satisfaction regarding ongoing rate hikes, as if it's a long-awaited comeuppance for the U.S. long-term profligacy. I'm not even going to try to pronounce that word. As all these hikes haven't really done anything to reduce this profligacy. Indeed, the hikes have dramatically raised U.S. interest expense and lowered tax revenue, which will make the budget deficit even worse. But here's the key thing. Yes, the economy was overheated. We had, Bored Apes, TikTok investors, Airbnb insanity, but these deficits have nothing to do with the above things, which are symptoms of them. They have to do with the three very specific things that account for nearly all U.S. government expenditure: Medicare, Social Security, military spending. I've been a big proponent of, hey, if you want to fix this financial situation, you got to, A, print less money. Okay, we're doing that a little bit. But B, you have to reduce government expenditure. And that's not what we're doing. We've done nothing to address these issues this year. Massive deficit spending to pay for the above, plus much higher interest expense, right? Because the Fed funds rate is increasing, compliments of Jerome Powell, which is understandable. Will continue no matter how high Powell hikes, nor have the Fed rate hikes addressed the actual underlying causes of inflation. Massive lack, and this is the big one for me. I think this outweighs everything else, but massive lack of investment in energy/oil and gas. Labor inflation due to demographic aging, sunset of max globalization era. This is just AKA, we've lived in a period of globalization and peace where we've had, open trade. And now we're seeing issues like Russia and Ukraine, China and Taiwan, North Korea, geopolitical tensions rising, and potentially less open trade among different countries, which is, again, a big issue, especially, right, we are not energy independent. So that was the other big thing. I said, we need to reduce government expenditure and become energy independent. Those are the three things. Right? I think you talked about like, hey, if you were the Fed force, if you were the Fed chair, or if you were the president, what would you do differently? I would invest in becoming energy independent, stop printing so much money, and reduce government expenditure. Those are the three things, and we're really only doing one prong of that, in that we've slowed down the printing of money and we're starting to raise rates. But Jerome Powell can do all he wants. He can do all he wants, but you can't fight $230 a barrel oil. If we get to $230 a barrel oil, gas prices are going to be insane, and all of the consumables, goods and services prices are going to spike, and you're going to see inflation spike as a result. You can try to curb demand by bringing increasing the cost of money, right? Increasing rate hikes, the increase in the Fed funds rate. You can make mortgages more expensive. You can make car loans more expensive. You can make it more expensive to borrow money, and thus, slow down demand. But this is potentially a completely different issue than just needing a recession and a reduction of demand. We have potentially an energy issue.
Here's the thing too, Forrest, is what if it gets to a point where people are having to borrow? Like, I have to borrow money to pay for gas. I have to borrow money to pay for groceries, whether that's through a personal loan, using credit cards. And so this thing could, like, if we're headed this way, this thing could be really bad.
You need some money for gas, bro?
Yeah.
I'm just saying. Like, the whole point, what Forrest is saying, the whole point of hiking up these rates is to make borrowing more expensive. But what if you have to borrow to pay for necessities? Right?
Yeah, you're seeing that in credit cards, too.
Yeah.
Yeah. So, I mean, that's what I see. And I think it'll take some time to get there. Maybe it's 3, 6, 9 months away. And this is why I'm hedged in oil. But this is what I see as I'm trying to find the S&P 500 here. This is, last time this big, I'm on the daily, I should probably go out to the weekly, but the 2008 crash was due to the housing crisis, right? Bad loans. Well, I think what's got the potential to cause that to happen again, a crash that large or larger, is oil and gas prices and dependence on other countries for oil and gas, causing systemic inflation that becomes entrenched, which would be, obviously oil prices would go up a lot. So you want to be hedged in oil. That's why I don't invest in stuff outside of crypto usually. I just don't. I think crypto is the fastest growing asset class. It's onboarding. It's growing at the same speed as the internet grew in the early 2000s. So I don't see the need usually to invest in anything that's not growing as fast. And I'm also young, so high risk, high reward. I have a higher risk threshold. However, this is so risky, right? What we're about to potentially see in oil and gas prices, I think is so risky that I feel the need to hedge outside of crypto. That's just my take. I don't want to be the doom and gloom guy. You guys know that I'm normally very bullish, very, very bullish. Especially over the next 3 to 6 months. I'm still, seasonally, it would expect good performance out of the S&P 500. Do think it may take some time for oil prices to elevate. Maybe we have a good Q4, a good Q1, but longer term, unless we start to see some changes in energy policy in the U.S., I start becoming a little bit more mid to long term bearish and more worried about a collapse. And it's not because of the reasons that a lot of people are talking about, and because of a hawkish Fed. It's really because of oil prices and a lack of energy independence in the U.S. But I got some other charts to go over rather than just oil. I didn't mean to get so caught up in oil. I know we wanted to review Matic. Happy to look at Ethereum as well, or whatever else we want to look at.
Yeah, no, but I think it's important because Robin says this all the time, but oil and energy, it's the bloodline of the economy.
Yeah.
And so if oil is $230 a barrel, guys, it's not just gas that's going to be expensive.
Here's the thing.
Literally everything.
If content creators, ourselves included, if we're going to discuss the Fed and their interest rate hikes and the implications of that, and how it affects crypto and the broader markets, then I feel like we're doing an injustice not to cover oil in the same breath, because it's also just as influential, if not more, because that is how people get around and how products get around that we're buying every day. So
yeah, but yeah, we'd love for you to take a look at Matic, Ethereum, and obviously Bitcoin, which we probably already going to show anyways.
Yeah, absolutely. So let's just do Bitcoin first because it's honestly the least exciting. And you guys, I try not to beat up on Bitcoin too much because I know a lot of I get it. Like I understand why people like it so much. I just, for me, with the potentially higher energy prices and the fact it's not profitable to mine right now, and maybe it'll melt faces. Maybe something will happen and it'll melt faces. We'll get like some sort of big catalyst, but I don't see a very high likelihood of a catalyst until 2024, until March of 2024, which again, at which time, a little bit further, at which time I will happily flip bullish on Bitcoin and going into the Bitcoin halving. But we're just so far away from that. We have a long time. So as an investor, right, and you're looking at the market, or a new investor, I think what's happening too right now is we're seeing new investors probably come in and they're like, okay, if I'm going to invest in crypto, which is a little bit more of a high risk investment, but it's a high growth opportunity. Do I want to invest in Bitcoin, or do I want to invest in like all of this other revolutionary technology? Do I want to be an investor in Ethereum, right? Do I want to be investing in Matic, which just has had extraordinary partnerships recently and is has a business development team that is absolutely incredible and is moving into the traditional finance space, or where they're seeing like JP Morgan doing transactions. I think MasterCard just did a demo of something on Polygon. We just saw Facebook and Instagram. They're going to be doing Polygon NFTs, and I think Solana NFTs. Don't quote me on that. There's like that's very tangible. That's extremely exciting. And then over here, you've got like this. This is supposed to be a hedge against inflation, but if we overlay inflation, we see that inflation has spiked and price has actually gone down, kind of undermining the narrative that Bitcoin is supposed to be a hedge against inflation. So it's like
here's the thing, though, Forrest. To be fair, right? Gold has been seen as a hedge to inflation, and gold has been down too.
Agreed, and I am equally bearish gold. I think gold is not a good hedge.
What are we bullish on?
Personally.
Like seriously, what are we bullish on? What are we bullish on?
I'm bullish on ETH and oil right now.
Literally, if I was a market manager, right? If I was an investment advisor, and my guy came up to me and said, "Look, I'm getting crushed. Where are we putting our money? Cash, inflation. Treasury securities can't beat inflation. Gold down. Precious metals down.
Yeah.
Risk on assets down. Like, what are we doing? Oil? Put it into oil futures? Like,
right.
It's just a messed up situation.
I understand why people are so like they've been preached at that gold, hedge against inflation. But if you look at it, I look at everything in terms of supply versus demand. I think supply and demand runs everything. If you look at the periods of time where gold saw a reduction in production, like a net issuance reduction, similar to what we see with a Bitcoin halving or an Ethereum merge, where the production of gold in the world starts moving downwards. We saw it from 1970 to 1980. Right, if we go over to the gold chart and we go to, I'll use, I guess, Oanda, and I'll get rid of the inflation. I think that it's just kind of a narrative that's been pushed in terms of gold being a hedge against inflation. I think it's been somewhat correlated. Gold in the past has been somewhat correlated with inflation. But look at this bull market for gold. It started in 1970 and it went through 1980. This gold bull market, this is insane. 2,323% of a bull market. But that directly correlates with the production decreasing. As soon as they realize, oh, gold's really expensive, we can sell it for a lot of money, gold production ramps up, and you see a bear market from 1980 all the way to like 2000. I'll get the exact number. Like, I don't want to be invested in anything that can see a 21-year bear market. Like, this went through a 21-year bear market, and that is, to me, is not preserving value. Yes, like if you stretch over the course of go from the 1970 to now 2022, yeah, if you like linearize this. So like you look at this, the average, the mean, sure, that's been fine, but there's been 20-year periods where your money wasn't working for you. I want to be a little bit more active of an investor than that. And that's why I'm not a big fan of gold. You got a 20-year bear market. So then what happens? Next bull market for gold, 2000 to 2011. Well, let's go look at the global gold production chart. When does the gold production start moving back down again? 2000. It goes all the way down until 2008, and then spikes again in 2009. Spikes from 2009 all the way until recent. Well, we only have data through 2015, but again, you look at the chart, right? 2009 through 2015 is what we have data for. You see that gold bear market. And I don't know what gold production has been recently, but I would venture to bet that it's very correlated. So that's why I personally am not a big fan of gold. I just think it has to do with how much they mine. And if they continue to mine more at elevated prices, you're just going to see like an equilibrium or, a pullback. And I think it has less to do with inflation. Then you also have gold. The thing with gold is you have competition. You have competition from crypto. You have like Bitcoin coming in as like, digital gold, digital store of value. So now you have competitors for gold. But again, didn't mean to get sidetracked with that chart. I understand the counter arguments to that, and more than happy to take those into account. I just that's my point of view. I just think there's potentially better assets out there to invest in at any given time. All right. So Matic has been completely, it has had just a completely disrespectful pump. What I mean by disrespectful is it is
Disrespectful?
not respected this $1.03 to $1.05 resistance. And there's so much resistance here that it just blew through. I shorted Matic at 104 and got liquidated on it, which is fine. It's going to happen as a trader. You're going to get. I'm not afraid to admit that at all. You're going to get.
That's what I like about you, Forrest. Is you always hear about everyone's wins, and I made this much money, that much money. It's good for the people. I'm not saying it's good you lost money, but it's good for people to hear that not everything's 100%. You're not going to hit on every trade. Now, do you think? If you zoom in on that chart, because I haven't really looked at the Matic chart because I knew you were coming in here, but have we built support on top of that $1.02 range, or are we still waiting for that to happen? Like, can we say dollar now is support?
Yes, so that's exactly it. So we just marked out the long levels from these two lows that I've kind of marked out with the yellow arrows here. We marked out those two long levels. Those are at $1.03 and $1.04. And then we have this 2x short level from this big high over here, which also came in at $1.05. So there was a lot of confluent resistance here. And Matic just said, I don't care. We're pumping through. And Matic deserved, the bulls deserved to take this up above this level because they just slammed straight through it. They never looked back. Now, we did get some respect at this level initially, and this was a secondary test after we had, made a series of higher highs and higher lows, and what, could have been described as maybe a bit of a ascending triangle here, which is a bullish pattern. Now we've broken out of the top of it. We've caught resistance. This is a margin pressure level. I'm not going to mark it out because I'm not sure exactly. I think it's off of this most recent local low. But it's also, our last line of resistance before we kind of plummeted down to 32 cents here. So the way that I'm playing this as from a trading perspective, and keep in mind, this is a trading perspective, is a short-term perspective, looking to get in and out. This is not grabbing a long-term bag of Matic. The time to do that has long since passed. You had an opportunity well below the green easy bands, which we'll throw on in just a second, to accumulate Matic. There's no reason to be accumulating Matic to hold in the long term. What happens if we get that black swan event that I'm talking about, where oil prices go to $230? Yes, that's, Matic's great, but basically everything in that case is probably going to dump pretty hard, I would imagine. We'll see. But you may have another opportunity a year from now in 2023, maybe mid-2023 if we get a really bad crash, to pick up Matic well below where it's at right now. The risk of just jumping into a long-term position here is just too high. It's too high for me. I think Matic could run to $3, $4, $5. Who knows? Maybe we get a really, we get a little bull market here. We get the Ethereum narrative really popping off. And Matic does extremely well. And you'll look back at this and you say, "Oh, you're such an idiot. Why didn't you ape in at $1.14?" It's just because, yeah, that reward scenario is plausible, but the risk is too high. So as a short-term trade, we look to flip long when we're invalidated on our initial short. So we're invalidated at this level. This is still even though Matic disrespected this level and just pumped right through it, it still maintains its relevance as a support resistance level, as an SR level. There's still long pressure here. There's still short pressure here. It still maintains its relevance. So if it comes back down, that's where we want to capture a bounce. So between $1.03 and $1.05, 1.03 to 1.05 SR flip long is what I'll put there. And
Nice.
again, we could get really nasty price action here. We could get whipsawed. We could see this come down below, and then we'd have to flip short on it. If we start seeing a really bad correction and we go below this level, we go down to, like, say 90, 95 cents, and then we come up to retest this as resistance, then our short becomes valid again. So from a trading perspective, that's how we want to look at it. This is just the trigger level, and we want to be, playing the bounce there. So that's Matic. Pretty straightforward play. Happy to look at anything else. Do we want to look at ETH? Do we want to look at Chainlink? Anything?
Maybe ETH.
Yeah, so ETH, you can see I've been messing around with my fractal here. This is the Bitcoin, the 2016 Bitcoin halving, which when you take into account the net issuance reduction of the 2016 Bitcoin halving and you compare it to the net issuance reduction of ETH, I know I sound like a broken record here, I've said this a million times, but the merge is most similar to the 2016 Bitcoin halving. It's most similar. And what we actually find is we are running ahead of schedule. We have now reclaimed in a matter of, let me find September 14th here, where we were. We have reclaimed this level in a matter of 51 days. Meaning, if we go back and look at the 2016 Bitcoin halving, we saw the same 40% pullback. We saw a buy the rumor, sell the news event in the short term, where we saw a 40% pullback in the pre-halving peak, just like this pre-merge peak. And then we saw it take 100 days for Bitcoin to creep back up to this level that it was at the halving, right? Whereas Ethereum's actually running ahead of schedule. It's 50 days ahead of schedule. It's reclaimed this level if we compare the two events. So this is actually pretty bullish for ETH. Okay, so the levels to look out for Ethereum. I'm going to put this guy over here. Let me get this correct. I know it's kind of a pain to get these wicks exactly correct, but the accuracy really does matter. All right, so we've got that, and we've got off of our last local low, our trip down to 1190. That's going to show us. There we go. That's going to show us very confluent resistance at Ethereum. Ethereum's resistance level at 1785 to 1790. That is a 2x long and a 3x long and a 2x short. We've seen this hold as resistance before. Now, this actually looks somewhat similar to what we just saw with Matic. We just saw Matic slam through this level. However, I'm not going to use Matic as the base case for what I would expect to happen for Ethereum. I'd be very happy if Ethereum slammed through this. I am personally in longs from down at 1260. And then I reloaded twice at around 1500 or 1510 to 1522. Those were important margin pressure levels. And we have now kind of pumped up above this 1586 resistance level. And I do think that we can take a trip up to this $1,800 level. That is the resistance level that I personally plan to close my long positions if we get there. There's no guarantee that we'll get there, and start entering some shorter term shorts. Yes, I'm very bullish on Ethereum, but in the short term, I don't mind trading it both ways because I would expect some sort of a correction. The kind of base case pattern that I'm kind of tracking and expecting to play out would be what we saw last market cycle as the bottoming pattern for Ethereum, which is this ascending triangle, which would be a failure to break through $1,800, some sort of a retest, maybe as low as 1440, and then a push up higher to take us to 2,000 and 2,400. That would be very, very similar to the pattern, the bottoming structure that we saw in the last bear market. So this ascending triangle here, explosion upwards, and then we started bleeding out, but we still made support at a higher low. And then, of course, the pandemic, we can't really count on that happening again. However, maybe we have an oil crisis around that same time frame, and maybe we do see some sort of a short-term crash out of the market. But that's what I'm looking for out of Ethereum. I am constructive. I am bullish on Ethereum. So long as oil prices stay relatively tame for the foreseeable future.
Awesome, man. That's some good TA. Guys, if you're not subscribed to Forrest's YouTube channel, or if you're not following him on Twitter, why? Ask yourself that question. Look yourself in the mirror, ask yourself why. If you haven't done so, the link to his YouTube channel is in the description of this video. Also, Rocco, will you throw his... Go follow him on Twitter. He's very active on Twitter as well. Lots of great threads. Lots of TA charts. All right, Forrest, would you like to stick around for some news, or you got other plans?
I'm more than happy to stick around if you guys don't mind. Otherwise,
hell yeah, bro.
If you want to kick me off, you can kick me off.
We do got a handful of new people. Just gonna give a quick shout out here to go down the list.
Is that Satoshi Glakamoto?
Yeah. So we got Seek and Hunt, Satoshi Glakamoto, Chuck Strickland, Matt, Magician, Goatvert, VSAC, Kevin Shoemaker, DRS, Bo Rabbit, Manny Johns, Barbecue Jr., and Ultimate Finish.
Did you say barbecue? Did you say barbecue?
Yeah, I did say barbecue.
I love barbecue sauce. You know, Michael Saylor was a barbecue fan, by the way. So, all right. So a bit of odd news, right? I thought it was kind of odd. I'm curious to get your guys' take. But Elrond, which their token symbol is EGLD, EGOLD, they're rebranding. They're going to be now called Multiverse X. They will shift their focus to the metaverse, sourced from Cointelegraph. Formerly known as Elrond, the company will move forward on the new name Multiverse X with the introduction of of 3 new metaverse forward products. These said products are called X Fabric, X Portal, and X Worlds, and they are the 3 new tools behind the rebrand, all of which aim to help metaverse creators and users. The tools include a metaverse portal, digital asset holder, creator utilities, and a deployable blockchain module. Is this a good move? I want to get Rob's
I'm
opinion.
about to go short Elrond right now. That is terrible rebranding.
Dude,
Thank you. I was like, am I crazy for thinking this? Like, what are they doing?
That sounds like a metaverse porn company. Multiverse X. Like,
See,
no.
I thought I was the only one thinking that. Okay, so
No, that sounds like a
Metaverse
VR porn company. Why wouldn't they just rebrand as Multiverse? Why did they have to add the X to the end? No, I'm shorting Elrond.
Yeah, didn't they just make a few like really big partnerships too? I don't know, man.
I think sometimes it sounds foolish in the beginning, and then after it sits on you for a while, you end up digging. Remember when Puff Daddy changed his name to P Diddy? Everybody was like, "What? Like, why would you change your name?" And so
is this now I don't know
if you're gonna rebrand, do it in the bear market. I'll say that, but the choice name. So what is it called again?
Multiverse X.
Multiverse X. It's like this.
I'm not a fan of the branding, but how much does it matter?
Okay, here's the thing. So in pharmaceuticals, pills are named. Medicines named after in a certain style. You got Viagra and all these oxy whatever and all this. Anyways. I'm just trying to think of whatever pops in my head first. But
interesting that those popped in your head
Pepsid and Zantac. Anyways, they create these names and they're like short and they're kind of concise, couple syllables. Anyways, I feel like the successful crypto projects are kind of in the same niche, right? You got Ethereum, Bitcoin, you got Binance. And so it seems like it's outside of the mold to Multiverse X. Like, this doesn't sound like a cryptocurrency, and at least not in the mold of the serious players, and so that's my kind of concern. But hey, I mean, whatever.
I'm and I don't know if their tokenomics are going to change, if they're going to change the name of their. I mean, I'm assuming their token name is going to change, right? Instead of eGold, it's going to be MVX or something like that. I don't know. But
I don't know. Well, Polygon Matic, there's still Matic, but then they rebranded to Polygon. So I mean, maybe they'll keep eGold and then just
Yeah, I don't know, man. I don't know how I feel about this. I just don't understand the reason. I mean, I get it, the metaverse thing. You know, you have Facebook throwing $100 billion behind their project, but even they're expecting to not like make any money for 10 years. So if you're Elrond, and I'm not saying they're a giant project, but they were pretty well known. I mean,
Well, here's the
people
thing.
in crypto.
Well, did you ever associate Elrond with metaverse?
No.
So perhaps that's their strategy. Like, hey, we're trying to get into the metaverse. Nobody's taking us seriously. We're building the metaverse. Nobody really cares. And maybe they're like, all right, we're just going to change the name.
Well, maybe there's
That
a
way
reason
you know
nobody
we're
cares.
serious about it. So, and I mean, you know what? There are a lot of layer one smart contract platforms out there. And maybe they're just trying to stand out from the crowd. I mean, I don't know.
All right, let's move on.
Elrond sounds kind of cool. Isn't that like a Lord of the Rings thing? Elrond?
Elrond?
I don't know.
I don't know. Is
what Elrond means. It just sounds like it's from the Lord of the Rings.
I think yes, but different spelling.
Okay.
Very similar. Yes.
I have no idea. So let's move on to Solana. Their recent update could be the answer to network stability. This is a source from AMB Crypto. Solana has been beset by what seems to be a curse, which are uncontrollable outages. A recent interview with the co-founder, Anatoly Yakovenko, had a hint that an end to the outage might be in sight. If you remember, this year alone, Solana has had 5 outages, each brought on by a flaw in the programming or the network being overloaded with phony traffic from bots, also known as DDoS attacks. Yakovenko explained that Solana was developing a new client called Fire Dancer that he hoped could permanently solve the problem. But he also dodged a direct answer or a direct question when asked if and when the Solana network would be finally out of the beta phase that it's been in since they launched. I know you're a big Solana guy, Forrest. You know, I think we can all agree here that these network outages for the longevity of this, of anything, right, is not good. Are you happy with the speed they're moving to fix these issues? Do you think they should have gotten on this quicker? Do you trust in the developers and in Anatoly to get this thing figured out?
Yeah, I mean, it's definitely not a good thing. If you look at the amount of transactions that they are capable of processing and have processed, I believe it's the most out of any blockchain. Again, don't quote me on that. I don't have the numbers in front of me. But they have a lot of traffic, which is a good problem to have. And the outages have been addressed, and there has been some improvement. Now, I know I sound like I'm in denial of an issue or trying to make light of an issue that's really big. But from an investment standpoint, I personally think that a lot of people that are in crypto because of the philosophy, for philosophical reasons, or the, you know, for the power of decentralization, I think you have to separate the two from you have like an investment perspective, and then you're in it for the decentralization and the philosophy of it and what it stands for. I personally think from an investment perspective, the decentralization as a spectrum, extreme decentralization does not necessarily always correlate to better price action. I think there's other variables in the regression model that contribute to positive price action more so than decentralization. We see centralized you look at Binance, it's like you exclude stablecoins, Binance is number 3 right behind Bitcoin and Ethereum. Very centralized. I would argue that Binance and Binance Smart Chain is a very centralized coin. Yet it's performed better than just like 99.99% of cryptocurrency, better than everything from Bitcoin and Ethereum. So I personally do not from an investment perspective, I do not put a heavy weight on centralization. I think the average person that's in the crypto space really, really values decentralization, and they're not able to kind of cut that out of their investment model. So that is why I don't necessarily, it doesn't scare me. Like when Solana goes down, it's not good for the network. Yeah, it's not good for stability. It's not good for centralization. But I think that has very little or an underweighted, effect on token appreciation over time as compared to more important things like tokenomics, like user base, like adoption, speed, scalability, stuff like that. So yeah, it's not good, but again, it doesn't worry me given my investment thesis.
Okay. What about you, Robin? Same question.
I think they're still new, and they scaled exponentially, especially compared to the competition. And so to have the expectations that you can move that amount of value with that much throughput and not have any hiccups, I think it would be unrealistic to not think that would happen. I mean, you can even look at Ethereum. I mean, they had to fork their whole chain. That's where we got Ethereum Classic. So, mistakes are going to happen unless you decide to just move at a turtle's pace and build one step at a time. But that's obviously not the roadmap that Solana takes. And so you can make the argument, what is the better path? I mean, Microsoft came out, when they came out full of bugs, but they just launched it and you had Windows. And, from there, they just fixed it as they go. And, Microsoft was full of holes and issues, but obviously they are the king when it comes to the personal home computer. Obviously Mac has made a lot of headway, but also Mac has had that slow, quality-driven approach, and over time they made up ground. So, I mean, it's two different strategies. So I don't think that one is right or wrong. But scoop up adoption now, get a ton of community, a ton of users on your platform. And offer a product that nobody else can offer at the speeds that they offer.
But that can be a negative too, right?
I said it could be a negative. Yeah. I mean, 100%. I'm just saying that there's multiple ways of running a business, and essentially that's what it is. They're running a business. They're offering a product or in the form of a service. And, it's a product, it's a service that other people can't offer, a smart contract platform with the throughput that they have. Perhaps now at this exact moment, some people have caught up, but at the time of its rise, there wasn't anyone doing that. And I mean, you can look at the other smart contract platforms when Solana was ripping in 2021, and they were, you had Ethereum, and you can only process a handful of transactions per second, and that's it. And so
I don't know. For me, it's like if you're gonna rush the market, if you're gonna launch your, if you're still gonna be in beta, at least be ready to fix these issues much more quickly than you have been. So, especially when it's the same thing. It's like the same. I'm not saying the same exact thing every single time, but it's the same premise. You have people flooding your network with BS transactions, and it bogs it down and shuts it down. Like, I'm not a developer. I'm not a coder, so I can't sit here and say it should only take a week. It should be. I'm just saying, you're going to rush the market. You got to be equally as fast fixing issues that you have if you're not going to take the time. All right, last piece of news I want to cover is Binance. They've reportedly helped Iranian firms skirt sanctions and trade billions of dollars. Source from Cointelegraph. Binance has apparently processed $8 billion worth of transactions involving Iranian entities since 2018. Why is this news? Because Iran has been sanctioned by the U.S. and almost the entire world for a long, long time. According to the information retrieved from Chainalysis, which, by the way, we did a interview, exclusive sit-down interview with their chief marketing officer. We posted that video a few days ago. Go check that out after the live. According from information from Chainalysis, most of the transactions in question took place between Binance and the largest crypto exchange in Iran, which is Novitex, which provides tips for avoiding sanctions. Like, it's literally on their homepage. Three quarters of the trades were made in Tron.
Love Tron.
Which Novitex recommended for anonymous trading without, quote, endangering assets due to sanctions. Binance's spokesperson Patrick Hillman said, quote, Binance.com is not a U.S. company, unlike other platforms that have exposure to the same U.S. sanctioned entities. However, we have taken proactive steps to limit our exposure to the Iranian marketplace. Should Binance be held accountable for this?
I don't think anybody should be held accountable for transacting finance. For an international company to do business with other countries, I think I'm not a big believer in this sanction thing. U.S. sanctions somebody. I don't think that every single company around the world should just not transact with them, even though they're not based in the U.S. That's just me.
I agree.
And you know what? I mean, you could sit here and think that, everything politicians are doing is right and correct and in the best interest of our country. But example after example falls short of that. And so are the sanctions the right thing to do? I'd argue that sanctions are actually expediting the process of destroying the dollar's dominance around the world as the standard for the unit of trade. People are unplugging from the network. Russia, China, a handful of other countries are now transacting in other currencies because of fear of sanctions coming down and a country not siding with the views of the U.S. And basically weaponizing the dollar is causing a ripple effect around the world that is going to negatively affect the U.S. economy. And this is yet another example of where I'm kind of fearful that if the U.S. goes out and tries to strong-arm Binance and be like, hey, your international platform that doesn't service U.S. customers is offering financial services to Iran, which we don't like, you need to do something about it. Like, we can't even use Binance here in the U.S. without a VPN. But, and so why does it matter? Do you care if WeChat is available in Iran? Should we shut down WeChat payment services here in the U.S.?
Shut it down.
Because you can go to restaurants here in the U.S. You can go book a hotel room with WeChat. Should we not take that payment because we don't line up with their political views?
Yeah, shut it down, bro.
And so, yeah, it's annoying, man. That's how we got into the tornado cash mess.
Yeah, what are your thoughts for us?
I think sanctions are going to become a thing of the past because I think technology is getting to the point where they're going to be so easy to skirt. I mean, that's the whole idea behind the philosophy of decentralization is that you unlock the ability to transact between any party without a centralized entity telling you can't. So you have a centralized entity, the U.S., saying no, you can't transact with these people because we don't like them, right? And I get maybe the reason for those sanctions. I mean, yeah, if a country's doing something that you don't agree with, and you don't want to do trade with them because of that, or you want to make that illegal, you want to sanction them. I get that. I get it's complicated. I get there's geopolitical reasons and strategic reasons that may be beneficial for U.S. citizens at the end of the day, or beneficial for certain parties at the end of the day. But I just think the technology is moving to a place where you're not going to be able to stop people from transacting. And so I think that sanctions are going to be made over the long term less and less relevant. Yeah, you'll still have government entities that won't do business. And maybe they'll even make it illegal or try to punish people. But I think we're moving towards a world where transactions will be increasingly anonymous for those who seek that, and private for those who seek that. Maybe they'll be considered illegal, but I do think that option is going to surface.
And people will always find a way to skirt sanctions or skirt laws and regulations.
Yeah, that's a great point. Because back in the 80s, you had no choice. If you wanted to send money abroad, you had one option, and it was a wire transfer or put money in an envelope and cash and mail it. I mean, so technology's getting to a point to where, you have multiple options through the private sector on the movement of value. And we're seeing that crypto's leading that charge. And financial institutions, the ones the old guard, are adopting that technology. We're seeing Fidelity, JP Morgan, all these big guys, they're integrating it as well, including central banks and
the first phase.
States,
and this didn't make it, but the first phase, the New York Fed, they completed the first phase of their essentially their CBDC, and they touted the fact that a transaction they made, which normally would have taken 2 days, took 15 seconds. 15 minutes or 15 seconds.
Yeah.
And they were like, oh my God, oh my God, oh my God.
Yeah.
So,
and transactions are going to move at the speed of text messages eventually. The same way that you can send however many characters are in a text message.
140.
140 characters?
That's Twitter.
Well, that is, Twitter's original character limit was based on the size of a text message, but then they expanded it by a certain percentage. So, but anyways.
Thanks, Elon.
So yeah, at some point, you know, you're just going to be sending a wallet. You're going to be sending a wallet address, which is less characters than text message can send, and it's just going to go through a network, and it'll be just as fast. And that's where we're going, and we're getting there.
I mean, it makes sense. We might not like
Solana's
it,
doing it
but
right now.
Imagine, imagine being able to tweet out money. Like you can like go into a room and throw cash up in the air. Imagine you could just go on Twitter and just throw Bitcoin up into the air, tweet out some money. I don't know, Elon, if
Just
you're
start
listening,
high-fiving people.
Yeah, there you
Start
go,
high-fiving people with your phone. You get $100.
Throw that Bitcoin in
You
the
get
air, baby.
$100.
Yeah.
You get 100
Let's
Bitcoin.
go. All right. We are done. Forrest, thank you so much. Guys, if you're new to the channel and you're new to Forrest, he is the former head of research at Tokenmetrics, created the Crypto Stackers Pro platform. How many users?
It's such a cool platform.
It's awesome. How many users do you have on there, Forrest?
About 1,000 on the platform. So we had the old platform, and now we're just doing everything through the trading view indicators, which is just much easier to manage. And then we also have the Discord. So there's like 3,000 people in the Discord now.
Yep.
It's probably the least expensive paid Discord that I know of. It's $9 a month.
$9, right?
And I think there's a lot of value in there, especially if you're looking to stay in the know on crypto. Just make sure you're watching the Sin City Crypto every single
how do you
day.
feel that
And,
Elon? How do you feel that Elon undercut you by $1?
Yeah, he did undercut me by $1. Yeah, we'll see. We got to see where when it launches. If it launches at $8, maybe you have to reduce the price. I don't know. He did undercut me.
And in their Discord, by the way, and which Forrest gave us access to, which thank you. They follow some stuff that I don't see anyone else follow, like Nansen Analytics, and so. I'm not saying everything's 100% perfect, but a lot of it's pretty spot on. So if you're not subscribed to his channel, go subscribe. Links in the description. Also, follow him on Twitter. He joins us every single Friday. So if you like it, come back.
Hold on. What are you guys doing this weekend? What are you doing? What are you doing, Forrest? What are you doing this weekend?
You caught me off guard. Next weekend, I have a wedding. My brother's getting married next weekend.
Another wedding?
Another
so
wedding?
this weekend's just kind of a little down weekend, I guess.
You're going to
I don't have
practice
any
your
plans.
dancing.
Unless, usually what happens is I wake up Saturday morning and I'm like, Courtney, do we have any plans today? And she lets me know. And if
Fair
not,
enough.
then it's 3 day.
Smart man. Smart man.
What are you doing, David?
My brother's baby shower's tomorrow. They decided to do a co-ed baby shower.
What kind of gift you getting?
I bought him a bunch of stuff.
Oh, what?
I bought him a bunch of stuff. This dude got the nerve to put a $500 bassinet on there. I'm like, bro, we're not millionaires. What are you doing?
On the registry?
Yeah, bro, a $500 bassinet. You know how much I bought mine for? $80. Get out of here.
You still got it? Why don't you just re-gift it?
I think I broke it. But anyways, Forrest, thank you so much. We're going to let you go, my friend.
Nobody's
We
gonna
will
ask
see
what I'm
you.
doing? What
We'll
am I-
see you.
I'm watching football.
No one cares. We will see you via video on Monday, and then we will follow up with you on Friday again. So thank you, Forrest. Have a great weekend, my friend. We will see you.
All right, brother.
See you guys.
All right. Before we sign off, Robin, what are you doing for your weekend?
Oh, thank you for that. I appreciate it. I'm going to think about all the new viewers that are here, including I Am Satoshi and Dante Hunter. Hola! No. It's,
And Skeezy said Iron Sheik is alive and well. It's a very, very important figure in the world
Don
of wrestling.
Manning. Don Manning, he's been here before?
Dominatrix? Wait, who?
Don Manning.
Oh,
Manning.
Don Manning. No. I believe that is the son of former quarterback Eli Manning. Anyways, guys, go check out our social medias. All the links are in the description of this video.
Oh, I'm playing Call of Duty this weekend.
Cool. Rocco? Finger Tornado. Friends, family, friends of family, and family of friends. We thank you so much for joining us on this Friday. On behalf of myself, Robin, Rocco, Kyler, and our man Forrest, we love you guys. Thank you so much for tuning in. Enjoy your weekend. We will see you back Monday. We have a lot of guests next week. So stay tuned. Frankie Candles will be joining us. Miss Teen Crypto will be joining us. We might have one more special guest, but we're not going to talk about that yet. But make sure to come back on Monday, 10:30 a.m. Las Vegas time. We'll see you then. Peace.